This is a trade recap for Tuesday, March 24th, 2026. Number 9 of 10 for one and done phase 2. So coming into the end of that one. And kind of a normalish day in the markets. A little bit of a gap down before the open. And kind of that's what we were given. Levels were, again, a little wide, but not horrible. Price action was decent-ish. But again, with kind of just where we are, again, was advised to be cautious, which is one of those things where when your coach says to be cautious, do as you're told, because probably see something that you don't and is really actually looking out for you. So with that being said, if you are a new or struggling day trader and you are looking for a coach or a mentor and you have not found one yet, I highly recommend you check out Pat Mitchell over at tricktrades.com. He has been doing this on a professional level for over a decade now. And I don't know of anyone that has the track record he does in terms of the quality education, as well as, again, quality strategy. Again, basically checking all the boxes that anyone that's learning to do this should be really looking for. So with that being said, if you're interested, head over to the site at tricktrades.com, look it over, read it over, see if it aligns with what you want. It is an education service, not an alert service. So have the right expectations. You're here to learn, not shadow trades. And if you want kind of a preview of what he offers in terms of information, you can always head over to his YouTube channel. He has over 1,700 videos on his channel now. So there's a ton of information. And yeah, I mean, it's solid information. It's a lot to crawl through. And the information inside the service and the lessons he gives daily, live, during the trading sessions is even better. So, with that being said, let's go ahead and get into today's recording of the live session. So if you're new here, just the way this is all laid out on the top here, this is SPY. On the bottom, this is Qs. These are the only two tickers that get traded. You don't trade anything else. And you honestly don't need to trade anything else. These charts here on the left, these are the daily charts. So these candles represent one day. In the middle, you have your 1 minute intraday chart. And then I keep my order execution here on the right. Now, before a trade session, Pat starts putting, again, together levels. And he actually starts the night before, kind of saying what's going on and what might be in play, what's, again, valid. So that's where he starts, and then he refines them the morning of the trade session for us. And that's what you see here. That is these blue levels here. And then he builds a trade plan for us around that, and that is what we stick to. I do throw these risk levels on here because I like a visual cue for risk. That is a personal preference. He does not. All right. So as you can see, for Qs, we're kind of opening between these two levels, gap down. SPY opening between kind of these two levels with another, again, a gap down as well. So kind of in the middle. So we're going to have to wait to see which levels test, trigger, and what we can execute off of. Again, where we are opening up, again, caution was advised. So with that, I size down. And let's go ahead and get this playing. It's about 10 seconds before the open. And typical, again, like it has been for like the past 2 weeks, patience. Sometimes you just need a little bit of patience to really let things set up, come into the levels. That way you can actually execute and execute proper. So there's the open. Kind of do that initial little pop to see what direction we're going to go in ultimately first. Let's go ahead and just kind of step this forward a little bit just so you can kind of see how it all unfolded. popping up, kind of tested the low of yesterday, which is the first kind of point that maybe would potentially reject from. But again, given where that level is and versus where the next, again, what would you risk off of there? Kind of makes it a poor level to potentially trigger off of unless you have something else. As you can see, we did reject a little bit there on the first reaction. Kind of took note of that level. That's what that yellow horizontal line is that I drew. That's one of the things I do like about TradingView is, again, you can kind of draw freehand on the charts at times, and it's that we can kind of just keep track of things. So keep going, keep stepping. SPY's continuing to kind of work its way up while Q's is kind of reacting. There's SPY also reacting. SPY didn't quite come up into the low of yesterday, so it's interesting. And then we start washing out a little bit. Not really washing out, but coming down into morning lows. See if we're going to hold there. SPY did not come down nearly as much, so that's kind of my first clue that, again, little divergence. Maybe there's a little bit more buying interest on SPY. Now, Q's comes through its morning low and starts working its way down. SPY's now coming into the low of the morning range. Zoom out a little bit, throw another level on there just to kind of keep track of that. That is the low from a couple days ago. So again, now it looks like, again, Q's is coming right down. Got calls loaded up for that level. So it's going to zoom in a little bit just so I can hopefully take a more ideal entry. Because that's one thing I've been trying to work on is, again, entering at the more precise moment. So as it's pushing into that level and boom, instant reaction. Again, it was just one contract. I kept all my other contracts basically in reserve and just exited out there off that reaction. It's the first reaction, kind of what you need to do. If it came down a little lower and got more size in, again, maybe. But again, when you have that, when you're advised to be cautious, it's one of those things like you don't want to be throwing a ton of size at these things. So even if it came down lower, I probably would have only added one contract and kind of pump the brakes right there because you need to respect what your coach is telling you. If you disregard it and do your own thing, one, you're not listening, and two, it's disrespectful. So keep that in mind. So just speed this up to kind of see how it plays out. Zoom back out. Now that I've done my one singular trade, it's like, okay, there is not going to be another trade. So as you can see, kind of comes down. Grab a screenshot right there. And you can see it didn't quite come down low enough to test the level again. Had more follow through, which is, again, just shows strategy works. So as you can see here on the chart, came basically up into here. Just rolling around. Get rid of that guy. Get rid of this guy. Popped up, kind of, again, tested that low on Q's and then came down to the level. Again, executed one there. And then again on the pop, sold the one there. And that was basically it. As you can see, there was still more to come up. But again, with just one contract, you got to pay yourself there. So if it had actually come down, say, to like in here, then again, probably would have done that one or lower. Again, trying to be respectful of the risk line, but keeping the average tight. It's a little hard to do when you're limited on size. But again, if it did that, would have just paid on that first reaction, kind of back up the same thing, start peeling out the size, at least half of it. But ultimately, you can see it came back down into the level, tested it again, which again, place to add if you had a larger account, more size, and you're willing to work with it. With how we were trading for it today, again, Pat was kind of explaining to us in August that he had the expectation of this kind of failing. So that's kind of where that caution was. So you don't necessarily want to be adding here unless you've kind of built yourself a buffer off this first reaction. And since I didn't, again, no other trade. And then, as you can see, if you took it there, again, came right back up. Again, that's another full size, beautiful trade. You have the size again where you can just start, like, again, kind of first reaction, like into there. You would have paid yourself, comes up kind of into here, paid yourself some more, came up into here. And you just peel yourself out of these positions again, where it's probably going to potentially test and reject. So again, it's one of those things. It's very easy to manage a position on this one because it gave plenty of opportunities to pay yourself. There wasn't anything really funky about it. Nothing odd. Again, in terms of the price action and how it moved around. Premium did, again, wasn't really stiff on either side, so that's always good. I'm trying to think, was there anything else that popped up today? No. On my side, again, happy with a more kind of refined entry there, paying on the first reaction, doing again the job, so to speak, in terms of following the plan and the strategy, and backing another one. So yeah, one was a green trade. Again, granted, it was one contract, and I took it off on first reaction, so it's $22. And again, it's one of those things where people will look at that and be like, "Ooh, $22! You're gonna be rich off that one." And which again, they're kind of missing the point. It's one of those things. How consistent can you be? How much can you? Again, everyone likes to, not everyone, but a lot of people like to rag on it. Again, it's like, okay, that's peanuts. It's like it doesn't mean anything, but they don't really understand of doing these kind of exercises to really refine your entries and your exits. You're trying to maximize what you can extract out of each and every contract. And when you do that, it'll translate into, again, further down the road where you're taking more size, where you've proven that you can do that in terms of being emotionally disciplined and not freaking out because you're oversized in a trade. And in doing so, I mean, those refined entries, that's how you keep a nice tight average and allows you to maximize your potential opportunities when it comes to paying yourself, which is incredibly important. So the idea of grabbing, $20+ a contract is a massive thing because that is really good. And again, it's one of those things where it's kind of what you're looking for. I think Pat kind of, depending on where you are and kind of how you're trading, where you are in this journey, it's like anywhere between like $15 and $25 a contract. I mean, that's pretty good, honestly. And it's one of those things where I mean, it's hard to again argue that with what I've seen in terms of, again, my performance, others' performance that are in the service. So yeah, it's one of those things where I would say he's right on the money there. Because it's one of those, well, your majority of your position will be that $15 to $25 a contract, because as you get size in, as you build a position in and around a level, you're also going to pay out. You're going to pull most of that size out on that first reaction. So yeah, you're going to capture that for the vast majority of your position to $15 to $25 per contract, and then if you have some left over that you slowly peel off over time, it's like, yeah, you can really pad that out. But the bulk, the majority of it, again, comes out fairly quickly and fairly early. So again, seeing those numbers kind of align, it's like, yeah, that's what you should see. And it's kind of a nice thing. Like Pat also, again, inside the service, posts his entry charts like every single day. So you can kind of pull up yours and look at it and be like, okay, this is what I did. This is what my Pat did, my coach. And he's wildly consistent and successful at this. Do these two things align? And if yours doesn't align with his, then it's like, okay, it tells me why. Ask yourself the why there. And that's what I do. It's like, what did I do differently than him? What do I need to correct so mine is more like his? Because ultimately that's kind of where you'll see things change and progress more. So again, just one of those things where review your trades again, and this is the other side of having a good coach and mentor, is that you have someone to compare against that knows exactly what they're doing. So it's again, good reference point for you. And if you don't have that because you're rocking the solo, or again, you're part of a different service that doesn't do that, that again is just kind of trash. Yeah, like this is what's going to happen. It's like you have no like bellwether, no guiding star really to let you know that, am I doing this right or am I doing this wrong? So you just get a whole lot of noise. So another reason to get a coach and mentor. But with that being said, that's all I got for today. This was number 9, so tomorrow will be number 10 of phase 2, and then we'll be moving on to phase 3. Yeah, probably do a little recap on phase 2, just to again let that one marinate and yeah sink in and reflect, and then go from there. But I hope everyone had a good mornings, having a good day, and we'll catch everyone tomorrow for the next one and the final day of phase 2. So have a good one.